May 2025. A sudden spike in tension between two nuclear powers, India and Pakistan, stirs international headlines. But this isn't just another political standoff. This time it was a live engagement in the skies. Just past dawn, radar signals over the line of control detected two squadrons approaching each other. Within minutes, the world's attention was captured by an aerial standoff between India's Rafale fighter jets and Pakistan's JF-17 Thunder aircraft. The encounter was brief. No direct casualties. But for the global markets, the impact was electric. Because when fighter jets rise, so do defense stock prices. What followed wasn't just a geopolitical ripple. It was a financial tsunami. The JF-17 Thunder, co-developed by Pakistan and China, is a symbol of agility, affordability, and homegrown aviation for Islamabad. It's been marketed to nations with limited defense budgets, often at a price of around $30 million per unit. On the other side, India's Rafale, purchased from France's Dassault Aviation, is sleek, high-tech, and extremely expensive, often costing more than $85 million each. This contrast in cost, strategy, and alignment shaped how investors reacted worldwide. Within hours of the airspace incident being confirmed by both countries, markets responded. India's Hindustan Aeronautics Limited (AL), responsible for assembling and servicing Rafale units domestically, saw its shares jump over 11% on the Bombay Stock Exchange. News broke that India had mobilized additional Rafales to key forward bases, and house order pipeline was suddenly viewed as a goldmine. Meanwhile, in Europe, Dassault Aviation stock surged 8% in Paris trading. Defense portfolios lit up. Analysts from London to Frankfurt recalibrated their outlooks, now factoring increased demand not only from India, but also from other nations reconsidering air superiority and the Rafale's proven performance. Interestingly, Pakistan's defense manufacturing isn't publicly traded in the same way, but Chinese partner AVIC, Aviation Industry Corporation of China, which co-produces the JF-17, saw a noticeable increase in institutional interest across Asia-Pacific indexes. Korean ETFs and Singapore-based funds began picking up AVIC positions as a proxy for Pakistan's sudden international relevance in aerial combat. Back in the US, where markets usually feel distant from South Asian conflicts, something remarkable happened. Defense giants like Lockheed Martin, Raytheon Technologies, and Northrop Grumman all saw intraday spikes. Why? Because in today's global defense economy, war in one region often signals opportunity and urgency in another. Institutional investors knew exactly what to do. Defense-related ETFs saw inflows within hours. Bloomberg's Aerospace and Defense Index jumped nearly 3% in a single afternoon. Option traders doubled volume in call contracts for companies involved in fighter jet tech, weapon systems, avionics, and maintenance infrastructure. For a moment, it was as if global investors were all watching the same dogfight through the lens of market dashboards. This wasn't just a geopolitical flashpoint. It was a trigger for capital movement, for strategic recalibration, and for a spike in global defense speculation. But here's where things get even more interesting. While the JF-17 and Rafale grabbed headlines in South Asia, across the Atlantic, another powerful move was unfolding. Not in combat, but in commerce. Former President Donald Trump, at a high-profile defense summit in Florida, announced a record-breaking arms deal between the U.S. and Qatar. The centerpiece? A multi-billion-dollar purchase of Boeing F-15 fighter jets. Trump, with his usual flair, called it a tremendous victory for American jobs and aerospace leadership. But the markets didn't need his sales pitch. Boeing's stock price jumped over 3% within the hour. What's the connection? It's about timing and perception. The world saw two major headlines: India and Pakistan in active aerial engagement, and simultaneously Qatar reinforcing its own air fleet with American technology. The message to markets was clear. Global air power matters more than ever, and investors responded accordingly. We live in a new era where the value of a fighter jet isn't just measured in firepower, but in financial power. And while the skies settle, the markets remember. Investors who act fast think globally and understand the signals. They're the ones positioned not just to witness these events, but to profit from them. In 2025, war has a stock price. And if you're smart, you'll follow the jet trails. not just on radar, but on the ticker tape.